Hey everyone, and welcome to your high-yield exam revision explainer for Unit 4. Today, we're going to completely demystify inventory management in ERP. I know exams are literally right around the corner, so consider this your professor-led masterclass. We're going to take all that incredibly heavy academic source material you've been reading and transform it into a highly structured format that you can actually remember when you're sitting in the exam hall. So grab your notes, let's get focused, and let's conquer Unit 4.
Here's your syllabus for today's session. We're grouping the 9 critical points from your source material into 4 study blocks: the foundation, the mechanics, reality check, and finally, real-world case studies. All right, let's dive right into our first module, the foundation. This is where we contrast the total chaos of old-school Excel methods with the automated precision of modern ERP systems.
Let's start with a really strong baseline by defining exactly what we're talking about here. Fundamentally, inventory management means tracking and controlling the goods a business buys, stores, and sells. It's a delicate balancing act, right? If you've got too much stock, you're burning cash on storage. But if you have too little, you're losing customers. The ultimate goal is perfect balance. So how does an ERP actually achieve this? Well, it ensures inventory is never managed in isolation. Here is your perfect exam-ready definition. ERP turns isolated warehouse stock into a live, fully connected business ecosystem. When a sale is made, stock is automatically reduced. When a purchase order comes in, stock updates instantly. There's absolutely no manual counting, no delayed messy Excel sheets. Whether a company is running SAP, Oracle, or Tally, the ERP system links stock directly to sales, purchasing, finance, and production in absolute real time.
To make that real-time connection happen, ERP systems come packed with some incredibly powerful tools. Let's fire off the 5 essential ones you really need to know. First, barcode and QR code scanning. Every single item has a code, which totally eliminates manual data entry when goods arrive or leave. Second is RFID technology, tracking goods via radio frequencies so items are recorded instantly just by passing near a reader. Third, you've got the WMS, or Warehouse Management System. This acts like a GPS for workers, guiding them to the exact shelf, bin, or zone to store or pick items. Fourth is batch and serial number tracking, which is literally a lifesaver for recalling expired medicines or defective electronics. And fifth, the ABC analysis tool.
Now, let's pause on that last one, because this represents the strategic prioritization of resources. This is a classic exam concept you are almost certainly going to be tested on. The ABC analysis tool built into an ERP categorizes inventory so management knows exactly where to focus their energy. A items are your high-value, low-quantity goods. Think expensive electronics or really rare raw materials. They need incredibly tight control. C items, on the other hand, are low-value but high quantity, like nuts, bolts, or cardboard boxes. By automating this classification, the ERP ensures a company doesn't waste precious management hours obsessing over paper clips when they really should be monitoring microchips.
Okay, moving right along to the heaviest academic section of the unit. Section 2, the mechanics. Here's how these systems predict demand, optimize stock, and manage complex orders.
You see, predicting future stock needs isn't just guesswork anymore. It's practically a science. This is the power of demand forecasting. An ERP uses historical transaction data and built-in algorithms to generate forecasts automatically. Take a cold drink company as an example. They obviously know sales spike every summer. But instead of just guessing how much to make, the ERP analyzes previous year's data and automatically suggests exactly how much raw material to purchase and how many finished goods to produce, long before the season even starts. And modern ERPs? They're taking this to the next level using machine learning and AI. The more data the system digests, the closer the forecast accuracy gets to perfection, preventing both expensive overstocking and disastrous understocking. In systems like SAP, all of this is handled through the MRP, or Material Requirements Planning module. Once you forecast that demand, you have to optimize the stock you actually hold in the warehouse. For your notes, group these 4 specific optimization techniques together. First up is the reorder point. This is where the ERP automatically triggers a purchase order when stock hits a minimum level, acting before you even realize you're running low. Second is safety stock. The ERP calculates the perfect buffer quantity based on lead times to handle those unexpected spikes in demand. Third is economic order quantity, or EOQ. Definitely memorize this one. EOQ balances ordering costs against holding costs to find the absolute most cost-efficient quantity to buy. And fourth, just-in-time, or JIT. Understand how JIT minimizes storage needs entirely by ensuring goods arrive exactly when they're needed for production. This is a massive strategy in auto manufacturing. And the crazy part, the ERP manages all these complex mathematical balances simultaneously. Now, the crucial takeaway here is to clearly distinguish between the automated customer sales cycle and the automated supplier purchasing cycle. Order management covers the entire life cycle, and an ERP categorizes this into two major workflows. Order to cash is the sales side. A customer orders, the ERP checks the stock, triggers the warehouse to pack it, generates the invoice, and records the payment. Then you have procure to pay, which is the purchasing side. A requisition is raised, sent out to a supplier, goods are received, quality checked, invoiced, and finally paid. The ERP handles both sides seamlessly, even juggling back orders and multi-location fulfillment if one specific warehouse happens to be out of stock.
That brings us to Section 3, Reality Check. Abstract concepts are great, but for top marks on your exam, you need to understand the macro-level pros, cons, and actual deployment of these systems.
Listen, these pros and cons, they are an absolute goldmine for your essay questions. You have to contrast the massive operational wins against the very harsh realities of actually implementing the software. On the benefit side, an ERP gives you incredible real-time visibility, dramatically reduced carrying costs, fewer stockouts, improved supplier tracking, and the ability to scale up without losing control. It also eliminates the human errors that literally cost businesses fortunes. However, the challenges are severe. Data migration alone is a total nightmare. If you move incorrect opening stock data from a messy old Excel sheet into your brand new ERP, well, your records are wrong from day one. You also face heavy resistance from warehouse staff who are used to their old manual processes, plus massive implementation costs, and the painful reality of redesigning your unique company workflows to fit the ERP's standardized global processes.
Because of those exact challenges, companies have to follow a rigorous implementation process. Your source material lists 8 steps, but to make this easier to memorize for the exam, let's synthesize them into 4 logical, chronological phases. Phase 1 is analysis and selection. This is understanding the business needs and picking the right software, whether that's a massive SAP deployment for an enterprise or Zoho for a small business. Phase 2 is configuration and data. This involves setting up the warehouses, defining valuation methods like FIFO, and meticulously migrating that master data. Phase 3 is integration and training. This means connecting inventory to finance and sales, and, critically, teaching that resistant warehouse staff how to actually use it. Finally, Phase 4 is testing and go live. You run test scenarios before flipping the switch, followed by a period of intensive hypercare support to catch any immediate bugs.
Let's cement all these abstract academic concepts with our final section, real-world case studies.
Let's start with a massive global scale. Think about the word billions. That is the number of individual items Walmart tracks globally across thousands of stores. Walmart represents absolute inventory management excellence. They utilize a highly sophisticated ERP system armed with RFID technology and something called vendor-managed inventory. What this means is when a product is scanned at a Walmart checkout, the supplier's system is automatically notified, and restocking is triggered instantly. The result? Walmart achieves some of the lowest inventory holding costs in the entire retail sector, while almost never running out of stock. This ERP efficiency is the hidden engine that actually allows them to offer those famous low prices.
Now contrast Walmart's massive global empire with the number 5,000. This represents a mid-sized pharmaceutical distributor in India. Before getting an ERP, they managed 5,000 different medicine SKUs manually on paper. This wasn't just inefficient, it was a massive legal and health risk because expired medicines were accidentally being sold. They decided to implement Tally ERP with inventory add-ons, utilizing the batch tracking feature we discussed earlier. The system was configured to generate automated alerts exactly 3 months before a batch expired. The result was absolutely transformative for them. 0 expired stock incidents, total regulatory compliance, and a 30% reduction in inventory holding costs in just 1 year. So from global retail down to local distribution, the fundamental mechanics of ERP remain exactly the same.
We've covered the foundation, the optimization mechanics, the grueling realities of implementation, and the real-world impact. But I want to end this revision explainer with a provocative question for you to ponder. As machine learning algorithms digest more and more data, and as AI forecast accuracy starts approaching 100%, will ERP systems eventually run global supply chains with 0 human input? Will the role of an inventory manager shift from actively making decisions to simply watching an AI run the world's commerce? Think about that as you review your notes tonight. Thank you for joining this masterclass.
Review these 4 structured blocks, deeply understand the balance that ERP brings, and you are going to absolutely ace Unit 4. Good luck on your exams.